afternoon. This is Oliver Slope with Blue Line Futures coming to you from the Chicago Board of Trade with another episode of the 2-minute drill, where I've got 2 minutes to touch on one market, maybe two if I'm lucky, but obviously there are time constraints. I've only got 2 minutes to break it down, and so I probably just have time for one today. But nonetheless, we're going to get this thing started. But before we do so, I do want to remind you that if you haven't followed us on YouTube, search Blue Line Futures in the YouTube search bar. Give us a follow, and also we're trying new things here in the in-house studio. So if you like what we're trying to do, don't like what we're trying to do, have suggestions or any feedback at all, just drop us a note. We'd be happy to hear from you. As always, we just appreciate the support as well. So without further ado, I can go ahead and get the shot clock started here with 2 minutes. We've got December corn contract pulled up here. We had a nice reversal today off of these lows, which also coincides with last week's low, which was, I think, technically significant from a support standpoint. A break and close below there, maybe funds would have continued to pile on their short position. But this little support pocket didn't just come out of thin air. You can really go back all the way to 2021. This was a big level back in November, December, and January. Top end of the range in November, December, and the breakout point from January. So previous resistance is now acting as support. A break and close below this 512 area, and I think you could potentially see additional selling pressure take the market down here. That psychologically significant $5 handle. Now, zoomed in here, you can definitely see that there was a significant pressure here that really started April 18th, April 19th, and a lot of that can be seen in the Commitment to Traders report as well. On April 18th, funds were net long 58,000 futures and options contracts. By May 2nd, the most recent Commitment to Traders report, they were short 112,000 futures and options contracts. So that's a swing of 170,000 futures and options contracts. Now, will they continue to press the pedal to the metal? Right now, there are certainly a lot of headwinds that would suggest that they could potentially do that. Weather has been pretty ideal through many of the top producing states in the Midwest. On top of that, we've seen pretty dismal demand. We've seen cancellations from China 3 times here as of late, and if that continues, that's going to be a tough hurdle to get out above. But today's reversal maybe indicates that maybe China is going to come back into the market and low prices will cure low prices. But time will tell. But anyways, from a risk-reward standpoint, if you're bullish, you need to hold this level and you've got a good risk-reward setup. A break and close below here, that's your tap-out point. Upside potential, looking at that psychologically significant 550 level as a potential target. So that's what we're looking at. That's right at 2 minutes. If you've got any questions for us, please feel free to give us a shout. As always, remember, futures and options involve substantial risk of loss and is not suitable for all investors.